need. Or we'll do the 6 degrees of separation, which is you're here, you hear something, it's not for you, but it's for your friend, your colleague, or someone that you know. All right, while you guys are here, if you're watching, feel free to share this live out with at least, once again, 5 to 10 other people. Welcome to all the amazing speakers tonight. Hey guys, how are you?
Great.
How are you?
Doing great, doing great.
Yes. All right. Well, it is Sunday and we do this every week. Let me see who should speak first. Oh my gosh. Okay. Let me see. How about, let me see. All right. Lady G, do you want to go first this evening?
I would love it. I would love it. Thank you for having me. Listen, guys, I am Lady G, your licensed financial professional. And I just like to show you how to have your self protected, have your families protected, have your business protected. When we think about business owners, close to my heart, everyone knows, is the beauticians, truck drivers, if you're a barber, a nail tech. You need to protect yourself. I can't say that enough. I often say, just think about, if you can no longer go to your 9 to 5, what are you going to be able to pull back on? When we think about protection should mean creating your own retirement account so that you don't have to worry about when you can no longer work, when you hit retirement and don't want to pick up another brush or pick up another hair dryer. What do you have to pull on? So there is a such thing as key person, key man, whatever you want to call it, that you can get on your business. Your business would pay for it. It is basically saying, if you are an owner, you can get a key person policy. If you have an employee or more, you can get a key person policy. That is just basically saying that if any type of life event happens, that policy would pay back into the business to keep the business running, especially if you want to leave that business as a legacy to your family. A lot of people want to leave businesses to family, but what if they're not structured to be able to hold it down once you pass the torch? So you want to think about that. Now let's think about the individual. I'm very big on life insurance because I don't know who told the lie, but GoFundMe is not the funeral expense account. So you really need to get yourself protected. There are so many things out there, from temporary insurance to permanent insurance. Don't put your foot in something too big, and don't put yourself in something too small. Get the one that's right for you. In the insurance industry, there are 2 categories that you need to consider. There is temporary, there is permanent. Temporary, term life insurance. If you purchase it for 10, 15, 20, 30 years, when that 10, 15, 20, 30 years is up, you no longer have insurance. Yes, you might be with a company that asks you to roll back into another term, but the point is, it is temporary insurance. I personally, this is just Lady G, think that there should be 3 reasons why that should come into consideration. One, if you are a homeowner and you have a 15, 30-year mortgage, then get you a 15, 30-year term, because all it's saying is, if God forbid life comes knocking at the door and you're gone and you're part of the 2% that term policies actually pay out on, your family doesn't have to worry about how they're going to pay the mortgage, how they're going to pay the property fees. That policy would pay out for that. I also believe if you don't have any type of insurance because you can't afford permanent, do not walk around here naked. Protect yourself. Get yourself covered, even if it's a term policy. There are some people out there that can get term and permanent. And when you get on a one-on-one, I can get deeper into that, why that is a way to go also. Another temporary is group insurance. That is what your job gives you. When you quit, get fired or retire, I promise you that policy is not going with you. I've been off of Wall Street now 16 years, and they gave me that policy, told me it was 2 to 3 times my salary, and I didn't have to pay a dime. They did not tell me when I left that job that I wouldn't be taking it with me, not paying a dime. When you see how much you'll be paying, you're going to wish you had went and looked for your own permanent policy. Because why? Insurance is based on your age and your health. And once you get older, if you're not in a policy, the price will rise. Another thing about group insurance and term insurance, you come upon hard times, you can't pull a dollar out of those policies to pay a heating bill or any other type of expense. I will say this, I have companies that I work with that are now you can get term with living benefits. If you're gonna get term, please get it with living benefits. What are living benefits? Income protection, terminal illness rider. God forbid you're diagnosed with less than 12 months to live. You can have full access to 100% of that death benefit. Critical illness, if you, God forbid, you have a heart attack, stroke, cancer, Parkinson's, Alzheimer's, major organ transplant, you have access, and it could be up to 90% of that death benefit. If it's $1 million policy, that's $900,000. Chronic illness. I often say my father was a commercial. He couldn't do all six when he had his stroke. Whether you can't feed yourself, clothe yourself, bathe yourself, shower, put yourself to the bathroom or to the bed, you have access to the death benefit. That is why they call it life insurance, guys, because you can have access to it while you're yet living as income protection. Then you go into the permanent realm. We are in the line still, income protection. You have whole life insurance. Whole life insurance, you could pay it till you're 100 years old. You can be the person that says, I don't want to have a bill my entire life. Well, then go pay it up in 10, 20, 30 years. You have that option. So there is no guarantee on traditional, let me say it again, traditional whole life. There is no guarantee of cash value. The same person that comes to me and says they had a policy for 20 years because mama got it when they were a baby and barely have a few $100s in there. If mama was paying $8 a month, there's a big difference from someone dropping in $800. Mama was earning pennies on that policy, and that's why it's taking you umpteen years just to make $20. So you need to know what type of policy you're in. Then we have the universal policy. There's different types of universal, just like there's different types of whole lives. But in the universal family, just know it's called flexibility. Whole life, traditional whole life, you can't go and a life event happen and you say, wow, I was 20 and I grabbed a $100,000 policy, but now I'm married, I have kids, I own a house, I need more insurance. So I want to increase my policy. In traditional whole life, you cannot do that. In universal, you can. You can make one phone call. I would like to increase my policy, please, to such and such amount. Or you could be the 80-year-old who got an $800 policy, $800,000 policy and said, wait a minute, the kids done moved out the house. I done sold the house. I don't need all this insurance. I don't even paying all this a month. You can bring it down. Universal just gives you that flexibility. There's fixed universal, just like whole life. Whole life is fixed. It will go and grow at a fixed rate. Then you have variable universal. Just a key word, variable. Anything variable means it's tied to the stock market. So like IRAs, stock options, 401ks, it takes on that volatility. That works for some people. When the market makes money, your policy makes money. When the market loses money, your policy loses money. So just know if you like that type of volatility, then go for it. Then they have index universal life. Index universal life, my personal opinion, this is Lady G, it is a life insurance policy on steroids because it is growing your money on a spread. There is no guarantees on what the amount will be each year, but there is a spread. And if you look at the 20-year look back, it's been a good 20-year look back. You can get into an IUL and set yourself up just like whole life, but with whole life being fixed, IUL spread. If you're in a whole life policy, you don't have to worry. You know that that's covering you until 121 years old. In the index universal life, it's like nobody can tell me what the market is going to close at tomorrow at 4 o'clock. So what they tell you is, listen, we don't know what the index is going to be. We don't know if you're going to fund this thing correctly. So from day one, we could tell you if any of those things go left, this can only guarantee to cover you till such and such amount of years. But if you do what you need to do, and the index does what it needs to do, this thing can stretch out to 121. It is a tax deferred account, tax-free withdrawals, tax-free loans. You can place a certain amount. There's a minimum and a maximum according to your age and your health. So if I tell you this $1 million policy, you can drop at minimum paying yourself $300 a month, but you can drop up to $40,000 for the first 7 years. Then that is your scenario. Why? Because you don't want to hit MEP. Can you put more? You absolutely can. I personally don't want to give the IRS a tip. You literally have to stay in the perimeters of what you are told, because the minute you hit MEC, which is modified endowment contract, the IRS says, okay, you done went a little too far, pay us taxes on that money, every dollar over that 30,000. So this is good. Real estate people use it. They flipping houses, dropping the money in the IUL. There is hardworking 9-to-5 people using it when they are shown the structure correctly, because there is a perfect, imperfect way to run it, to show someone how to properly create a retirement in it. Because when you hit retirement, you can say, hit me with such and such amount of check every year and have the checks come in. This is a retirement bucket. You also have final expense. We're still in protection, guys. Remember what I said. I don't know who told the lie, but GoFundMe is not the funeral expense account. So with final expense, for that person that doesn't want to make sure their family doesn't have to do a GoFundMe, they'll get a final expense policy. And that means that if you get a regular final expense, depending on your age, you can get the most 40 to 50,000. A guaranteed final expense, they won't ask you no health questions. The most you can get is 25,000, but you have to be over 50. But the small print that I need you guys to keep in mind, if you do not have that policy for 2 years or more, that policy will not fully pay out. So if you have it, God forbid something happens and you leave here 4 months after having it, only the premiums that you have paid will be returned to your family to go about the services or whatever they were going to do with the funds, plus maybe 10%. I need you guys to just know that we are all about protection. No, I am not against diversification. You can dip here, there, and everywhere. What I am about is your foundation being laid with something that is guaranteed. And then when you want to go play in the water with the other sharks, you can do it because you know you're already protected with something that is firm, guaranteed, and is your foundation to fall back on. Your foundation, if life come knocking at the door, and we know sometimes it can be knocking hard. We've seen it in these last 3 years. How many people, when COVID hit, couldn't go back to work or lost their jobs? What accounts did you have to fall back on? This is Lady G. If you want to reach out to me, you can find me at the link pinned to the top of the room and get on my calendar. You can even go to myladyg.com and get on my calendar so we could talk further. Thank you for this time. This is Lady G, and I'm done speaking.
Oh my goodness. I didn't even want the timer to go off on you because you were really, really giving it to us. You share a lot of different terms that most people don't understand who don't know about insurance. And I think that was great how you shared a variety of things for us to hear and want to know more about, because everything you spoke about, I'm sure you could do probably an hour presentation on each individual thing that you actually shared with us. So I personally hope that those that are watching we'll take you up on that call to get on a call with you. And basically, I know the call is going to be about where are you, what's going on in your life, and what you exactly need, and what should you jump into first, second, and third. So I hope they take you up on that call. I really do. I really do. So I want to tell you thank you for coming today. That has been Lady G giving you guys information about protection. She said life insurance, but it really was about protection. So I thank you. And I want to give you 2 minutes on the clock to give us a little more detailed info about how we can get in touch with you, because so many people need you and what you actually have to offer. So 2 minutes on the clock, Lady G, to tell us what you actually have to offer.
Well, you can get on my calendar, as I said, at myladyg.com. You can reach me in the office, 732-820-9710, because we do one-on-one sessions, and we do family Zoom. So if you have any families, frenemies, enemies that need this information, let's get them on a Zoom call so that they can get more in-depth information than I was able to do in 15 minutes. But we will take time to educate and even show them how they can get retirement with annuities. I ain't even going to go into it. You get a book a call and we'll talk more about it. Thank you so much for this time. You can find me on all platforms, Lady G, your financial professional.
All right, awesome. So I know Lady G is not going to be able to hang out with us too long. So I want you guys to take an opportunity to click the arrow above and give her a quick follow so that you can stay in touch with her. What we do here at the Masterclass Marathon is we ask for you to give them a quick follow and then hop in the DMs and start a conversation. That's basically how you get a little closer and get more info. So please take a moment to give her a quick follow if you desire to do so. And she'll stay here for just a little while before we bring another speaker up. All right, we're going to move over to our